Hey, this is Justin from nextbigtrade.com. Tonight, I want to take a look at the gold market. As you can see on this weekly price chart of gold, gold was basing since late fall of last year, but it was holding below the 30-week moving average. And if you're following the gold market, obviously you're probably familiar with the plunge we had in July. A lot of people were kind of blaming the late night naked shorting attack on gold. But regardless, gold does have a tendency to have late summer um, corrections, so not too out of the ordinary. So we got this plunge in July, and we've kind of based a little bit since then when we're seeing a rally. But the important thing to note is that gold is still below the 30-week moving average. The 30-week moving average is actually declining, so we're basically in a stage 4 now in gold. And really, if you're following stage analysis, the best course of action is to stay out of gold on the long side and kind of wait to see how this thing evolves. It's certainly possible that this is the low in gold, but we don't know that yet for sure, and there's no reason to really predict that being the low. um, I like to show this chart as a refresher on where we want to buy things in stage 2, but essentially what we're looking for in gold is a break above the 30-week moving average on a big increase in volume. And that's point A, where you can actually start entering positions. And then really a safer time to buy, which it doesn't always happen, but if it does, it's really a more of a low risk point to buy at. But buying that pullback to the 30-week moving average uh, is point B, and that's the next buy point. And um, if the market continues in a stage 2 uptrend after that, it's really a great buy point, because you're getting in a lower risk entry, and you can start riding the stage 2 bull higher. Now, one of the things that's kind of preventing gold from doing anything yet is the U.S. dollar, and I did a video on the U.S. dollar back in late March where I said that after this parabolic move, it was unlikely that the dollar would just continue ripping higher, even though like CNBC and the media was predicting that. So it turns out the dollar has been consolidating sideways, and it retested the 30-week moving average twice. And really, we're just kind of waiting to see what this latest uh, move in the dollar is going to do. If it comes down here and tests the 30-week again, I would deem that a very bad sign, because it's testing the 30-week moving average quite a few times, after such a big parabolic move. Now, it does need time to kind of consolidate off of a move such as this, but you know, we'll have to just wait and see what happens. And if it does break below the 30-week, it's going to provide a big boost to gold. The other thing that's really kind of holding gold back is the commodities market. And really, the plunge in July was almost exclusively a commodities based move, where the U.S. markets didn't really rally and the dollar didn't really rally. It was just that commodities, for some reason, were just sold like no other. So you know the continuous commodity index, which is shown here, is still in a stage 4, and it even made new weekly lows today. So this is just a ongoing bear market that seems like it will never end. But we need to see more constructive action in commodities to provide more kind of a bullish background for gold. Now, I think gold, since it's been in a bear market longer than most other commodities, it probably is more poised to break back into a bull market earlier. But once commodities kind of start forming a base, that will be very positive for gold, because it'll mean the sector as a whole is done declining. One constructive chart for gold, though, is gold versus foreign currencies. Even though gold broke out against foreign currencies early this year and has basically just consolidated since then. Now, it did break below the 30-week moving average recently in that July decline, but it's still holding support from 2014. So gold is still proving to be um, a strong currency versus all other currencies besides the US dollar. And like I said, it is down still from earlier highs in 2015, but um, overall it still is positive for the year against foreign currencies, and if it does hold this base, this would essentially be like that point B buy point, where even though it did break the 30 week, the low risk buy point is here, because if the stage 2 uptrend continues higher, this is like a perfect kind of a retest. Looking at gold stocks, obviously, as gold crashed in July, gold stocks got just absolutely smoked. And really, we kind of saw some capitulation type selling in GDX. As we can see, this massive weekly volume of over 500 million shares. So that's kind of a positive sign for gold stocks, that there was this much selling. And we saw a lot of selling again in October, November 2014. So there's been a lot of time for weak hands to dump their shares into the hands of stronger holders. But we can still see that GDX is below the 30-week moving average, and which sits around $17.84. So it'd be more prudent to kind of wait to see what GDX does as it approaches the 30-week again, and to see if it can break above it and start establishing the 30-week moving average as support. Couple of things I'd like to talk about too is, when we saw that massive decline in gold in July, you had a lot of people on the internet, a lot of bloggers in the media saying gold is dead. Like this guy wrote, gold, let's be honest about gold, it's a pet rock. Well, I'd like to emphasize that you should just ignore all opinions from almost anybody, but especially people like this that write an article that's just full of a bunch of fluff, and then just because gold is so demoralized and down from such a bad stage 4 decline, people like this in the media just try to capitalize on it. But realize that this guy doesn't know anything, because he's the same guy who wrote in 2011 that gold is cheap. Or he said, is gold cheap? Who knows, but gold mining stocks are. So he's basically saying he didn't know that in September 2011, gold was about to embark on a 4-year bear market. So is he the same guy you want to listen to when he's trying to say that gold is a pet rock and not worth your time, maybe potentially at the bottom of a bear market? In this article, he was trying to explain that gold mining stocks might be a good buy because they weren't going up, even though gold was making such a nice or a high. But obviously he failed miserably to predict the future, and so I wouldn't count on someone like this to be able to predict the future again for gold. One other thing to note on gold is that the speculators and hedgers in the gold market, the hedgers have a very low short position against gold now. And actually, this is the first time I've ever seen this, but small speculators, who are pretty much considered to be the dumbest money in the futures markets, were actually more short gold than the commercial hedgers who sell gold to hedge their own production. So as we can see right here, this happened 2 weeks ago. So this shows just how bearish the market has remained on gold. But it's been a 4-year bear market. It's an old bear market, and we're just kind of waiting on that stage 2 to develop. And really, we could get an explosive move when it finally does break higher. So be prepared for any type of new move higher. We don't even it's possible that gold doesn't even retest the 30-week to provide that secondary nice buy point, but we do want to see an increase in volume too. So just be wary of what can happen. But obviously, we're still waiting on a more constructive gold market to get positioned into.